Hi, now we've come to the end of summer. I think it's a really good time to do a quick overview of what we've been doing over the last year, what's worked and what hasn't worked, why we're positioned the way that we are. And I'm going to try and uncover 3 or 4 massive risks that are going on in global investing that most people seem to be ignoring. So if you were following this video series about a year ago, hopefully you'll remember that we made 2 pretty big calls. One was that we thought inflation was going to be a much bigger risk than the average investor did. And the second one was that we were really worried about the price of certain assets within the global market. And we looked to try and significantly underweight them, hold less of them than average investors. So the inflation call, well, without wanting to sound boastful, I think we were completely correct. We're able to buy a large position in something called inflation-linked bonds within our fixed income portfolio, and that's helped our investors considerably in the last year. On the relative valuation call, well, 2 things we did. One was we bought value, which is a style of investing, and that's worked out okay. We've kind of kept pace with the broader market, so we haven't made money out of it. I suspect that we will make a lot out of it over the next few years, but it hasn't happened yet, but we haven't lost anything. The other thing that we did was to underweight the US equity market, in particular relative to the UK. So we held much more in the UK, which looks very cheap by historic standards relative to the US. Now that hasn't worked at all because the US market, which we considered to be in a bubble, has just gone on and on rising. Now I think over the next few years, this is all going to play out and we're going to see significant underperformance from the US, and let me explain why. So there are 4 big risks going on right now in global equity markets, and none of them are correctly priced into people's portfolios. So the first one, I think we've had a collapse we're about to see a collapse in the Chinese property sector, which is 30% of Chinese GDP. So if that falls down to anything like international expected levels of about 5%, we're going to see very slow Chinese GDP growth over the next 10 years. And that's going to play out in revenue, earnings, prices of certain commodities. And people don't really appreciate quite how significant that is. The second thing is we've got this slow motion car crash going on in the EU around a thing called the PEP program, where the ECB bought almost 2 trillion euros of bonds without really clear permission from nation states that they would do that. And the German constitutional courts just said it's not constitutional. If this plays out and the ECB are forced to stop buying those bonds, then we'll see a very big contraction in monetary conditions globally. The third thing that's very important is inflation is taking a lot of money out of people's pockets. So and most of you will be aware, we've seen cost of living increase a lot. I would estimate it's about £1,000 per family in the UK we've seen already from food and energy price inflation. That's £1,000 that you can't spend on other things. This is very depressive for the global economy, and it's happening at the same time as the 4th problem, which is that government spending and central bank easing, they're all turning off at the same time, which normally, when this happens, tends to lead to significant economic weakness. So for all of these risks and potential sources of weakness to be occurring at the same time we see sky-high valuations, we think is completely unsustainable. So, yeah, even though not everything we've done in the last year has worked out at the time we wanted it to, we're very comfortable with the position that we have, and we think that's going to work out very well for our investors. So if you have any questions about this video or any of the issues that have been raised, please get in contact with me. I'd be delighted to speak to you about them. And as always, if you're interested in knowing more about what we do, you can click on the button here and follow us for every video. Thank you.